Recording is in progress. Happy Saturday, June 14th, 2025. I hope everyone is well or even better than well. I'm speaking slowly because people tend to come right after the webinar begins. So that's why it feels like I'm wasting your time. All right, I'm going to start this. I think you're going to feel, been doing this for 11 years. I think you guys are going to feel like this is the best webinar ever, and I'll tell you why. First of all, because the prepared portion is maybe 30 minutes, and then you can just get on with your Saturday. But more than that, or equally to that, is that within 30 minutes, you'll be like, oh, I have to have this. Or you'll say, okay, I don't have to have this, and I never want to talk about this again. So this should save you time one way or the other. Like this is it. This is it. All right. The slideshow is incredibly short, like 5 slides, and then I'm just going to do charting. Okay. First, I do have to give disclaimers. The results here are provided for general information purposes as a convenience to you, the viewers. The materials are not a substitute for obtaining professional advice from a qualified person, firm, or corporation. This is not a solicitation to buy or sell any security ever. In fact, this is not advice. Past performance is not necessarily indicative of future results, with a red box around it. And those of you that are coming here to look at some options stuff, you should read the characteristics and risks of standardized options, which is available on the OCC website. Those were the disclaimers. This is the agenda slide. I will do a quick charting overview of Pattern Finder. By quick, I mean 3 minutes, maybe 5 minutes. 3 minutes maybe. Yeah. Then Pattern Finder intraday algorithms, which are new. Our algorithms are now live updating for 0DT and 1DT traders, or just, you don't have to trade options, intraday trading. Pardon me. Then the whole point of this is the look back window. For those of you that are TradeMachine members, Pattern Finder members, certainly TradeMachine members, you've heard me say now for a decade, like don't just like think your trade and don't like write it down on a napkin and don't be like, hey, I got it, I know what I'm going to do, I'm going to buy and sell whatever. Like, right, as we like to say, write it the f down, or as I normally say since I'm crass, just write it the fuck down. Write it down. What it doesn't, I'm not saying if you're with Pattern Finder or TradeMachine, if you're a trader, when you start a trade, before you push buy or sell, okay, write it the fuck down. The tomorrow you, when you have a position that was started today, is an idiot compared to the today you that has no risk on in a position. You cannot count on tomorrow you. Tomorrow you will make bad decisions based on fear and greed. Today you, before you have any money put into it, is brilliant. You're brilliant. Please use brilliant you, and do not rely on emotional you. So I'm actually going to show you what a plan looks like. I've done this once on a very long webinar. This is going to be like 5 lines in an Excel file, just because some people loved my really long one, the multi-million-dollar trade I did in a couple stocks. And this is just like really fast. But it doesn't matter how you write it down. Don't think you know you know. That's it. And then I have to say this: once you have a plan, please follow it. It doesn't matter if you have a plan and you don't follow it, right? Okay. Talk about buying dips with Pattern Finder. Then I will be doing making TradeMachine better with Pattern Finder. This part is awesome for those of you that are TradeMachine members to see that. It's at least a third of the presentation. The whole presentation is only 30 minutes, so or less. So it's fast, but you will know absolutely for sure 100% without opacity, pure transparency, absolute clarity. This is how I use Pattern Finder for TradeMachine. Not sort of, not kind of, not sometimes. This is it exactly. 100%. This is how to use it. And that's why I think you'll enjoy this webinar the most. It's fast and also very conclusive. At the end, I'll do some live chart analysis that the audience can choose. You guys can choose. There's lots of people here. But if you don't want to stick around for that, don't. It's just because for those of you that want to hang around, we can hang around. That's it. All right. Yeah, just make the point, making TradeMachine better with Pattern Finder. This is awesome. Okay, so that's it. That was the slideshow. I hope you enjoyed it. This is the pattern finder. Oh, already made a mistake. Okay. All right, this is a chart. So this first 3 minutes is just like, what am I doing here? Okay. This is a stock chart. This is the NASDAQ 100 over the last 3 years daily. Okay, that's fine. Okay, this chart in and of itself doesn't do much. So if you're using Pattern Finder, very easy to get our algorithms running. You can start with support and resistance. Great. You'll notice the channels defining support and resistance. This has higher highs and lower and higher lows. You'll notice that sort of pulsing blue circle. In this example, we see the price coming up from the bottom. There's a little bit of a bobble, but a little bit of a bobble, but up from the bottom, up through support. So that would be a bullish indicator. It does not mean, for me at least, that does not mean a trade. I'll show you what means a trade. This will be very explicit. This means there's a bullish tilt, and this will matter for TradeMachine, right? I wouldn't take a bearish trade if I arrive on that blue circle. Okay, that's what that's for. Um, Now we can turn on congestion lines, which decorate the chart a little bit better, right? Okay, we'll be using these extensively in deciding our stops, our limits, our entries, if we're bullish, if we're bearish, and when we will do such a thing. In other words, we will use these to explicitly create a plan which says, buy this, sell here, sell here, sell here. That's it. Okay. I'm going to put these on, then take them off, but a lot of people like to see the actual highs and lows that drive these algorithms. It makes the chart a little distracting for me. So I'm going to talk, you'll notice I'll be toggling them on and off a little bit. Okay. But that's how you do it. And then finally, P&L zones would show you like, okay, this is a bullish looking chart. I continue to believe the pain trade in the market. This is not what this webinar is about, but the pain trade in the market is higher. I don't think this summer is going to be awesome, but like the pain trade is higher. But we're about equal risk to reward, about 8% to resistance and about 7% to support. But I'm going to turn off the P&L zones too right now because I don't want to confuse the charts too much. You will see me toggling the highs and lows. Okay, so that's how you look at a chart in Pattern Finder, 5-year, 10-year. We have now introduced, now I'm going to the second bullet point of the agenda, intraday, live intraday. So you'd want to do, let's say, 10-day minute chart, and you can do 5-day, 1 day. Just as an example, when this is all yesterday, so this is a 10-day chart. So this is June 13th. You can see in the tooltip right here, right? When it hit this is what Pattern Finder looked like yesterday. These aren't charts that are redrawn. This is how it looked yesterday. It has not been redrawn. So this is what you look yesterday. You were on Pattern Finder. This is what it looked like. Okay. This is where you would at the very least have not gotten bullish, right? We have lower highs, hits resistance again. Of course, you don't know if it's going to go down. You do in retrospect, but that's it. And then now, because it's hit the support and kind of bounced a little bit, I would say there's now a more bullish tilt to the Qs as opposed to say like 4 hours ago on Friday when there was a bearish tilt. Having said that, I'm just showing you that now if you want to do intraday analysis and trading, you can. You can also do, let's say, 5-day. Should look very similar. Same thing, right? Lower highs and kind of a bounce. Okay, this was not at all meant to describe a trade I would take. I didn't see any signal there. This was just to warm us up into Pattern Finder. I've now finished the first 2 bullet points of that agenda, and now we're actually going to get into what a look back window is. So I'm going to go back to a 3-year chart of the Qs. Okay, this is just 3-year chart of things. And here's the fundamental problem with charting. When any sane person, you, me, looks at this, we're like, oh yeah, dude, I should have bought like at the 420s, and obviously like it went up to like 530, and then I'm going to zoom in a little bit with my mouse and then move it over. Like, oh, it got toppy here. I would have made that I would have made those 100 handles on QQQ. Okay, and you and I both know you would not have, nor would I have. This isn't a competition. Because here's the problem with charts as they are today, and which are now solved, and I'll show you. When you look at this chart and decide what you would have done here in this, Liberation Day drop, and then you're like, okay, this is what I would have done. Unfortunately, incidentally, accidentally, We are using the future to determine what we would have done in the past because this is the future relative to this. That's the future. We did not know this here. If we did, everybody would have gotten long. So now I'm going to show you what we can do with Pattern Finder. We recompute, we maintain all of the algorithms. By algorithms are just fancy words for those little bubbles you see, the green line, the red line, the pink lines. We have them in history. Okay. The reason this matters is that any chart after the fact will look perfect. It's not just Pattern Finder. Every stock charting app you're using looks perfect. They all look like this in some way. Obvious dip buy on Liberation Day. Duh. Wrong. It does us basically zero good to look at a trade that happened in the past using what would have been the future. This chart doesn't help, other than making you feel bad if you didn't buy the dip. Okay. I wish I had a future machine for stock prices. I've worked on it. I'm afraid I haven't quite harnessed the power of the universe and time machines, so I can't offer you that. But with what I'm about to show you, and I'm using a lot of words because I need to give you the words before I show it to you because no one's going to pay attention to me once I show it to you. This new look back feature, we can at least see charts as they would have been in real time when we were deciding if we were going to trade and not trade. And if we decided we were going to trade, what our exits, stops, and stops would have been. Not based on this, based on how it actually looked at the time. Right? So of course we have the OMG chart right here. Oh my God, of course, buy the dip. Wrong. Completely wrong. So this is what I'm going to do. I'm going to go back to Liberation Day. And all of the lines you're about to see are going to be the lines that existed on Liberation Day. This is what it looked like on April 2nd. I'm going to zoom in a little bit I'm going to use my mouse roller. By the way, I don't think this is a buy right here. It doesn't matter that I know what happened in the future. I don't know what happened. Right now it's April 2nd. This is not a buy to me, not even close to a buy. And I'll show you why. I'm going to zoom in with my mouse, then pull it over so we can see. That dotted line is where the price was. I actually should have gone here. April 1st, pardon me. April 1st was definitely not a buy for me. April 2nd is something that I'm now going to consider, right? It's like, okay, what's going on? I'm going to tell you right now, I would not have bought, and I with full knowledge, I mean, not with full knowledge of the future, but at the time, I would not have bought this. I don't see a reason to buy this, and I'll tell you why. Yes, it's crossing up through support, but barely with a big candle. I am not putting risk capital right now at this point. Let's go forward one day. Well, I'm glad I didn't buy that day. And just to be clear, I wouldn't buy this day either. Even though it's like, oh, now it's on congestion, it's on support. No, I'm going to zoom in again. For me, nope, this is not clearly bullish. If anything, this feels bearish. I would not have traded this. I am not the guy that's going to tell you what to trade Liberation Day. I would not have. Let's go forward another day. Okay, well, it got worse. Again, I wouldn't have bought this dip either. Okay, no way. This is a bearish chart to me, not a buy the dip chart. Okay, I'm going to step forward to the 8th. I would not have bought this. Still not. I'm going to zoom in now. And that means I'm going to miss some of the upside whenever this turns. I'm going to zoom in. This is now April 8th. I'm going to zoom in even more. We can see it's now dancing with this congestion line. But you see this dotted line? That's the close. It closed at 416, and that congestion is 421. This is not a buy signal for me, and I know I will miss what eventually happens. I know it. I know. But I'm being realistic with you and showing you how to create a trading plan that isn't based on the bullshit of knowing the future in the present, because we don't. I'm going to show you when I would have gotten long. it's going to be the 9th. And when you see it, you'll be like, oh, he's not lying. Here's April 9th. Boom. This is when I would have gotten long. Skipped this whole congestion, missed this whole move. And now the dotted line, of course, is where the stock closed. It is now through congestion. It formed this little base. Forming a base is not at all good enough for me unless I get a bullish trigger. Now, April 9th, I would have gotten long. And when would I have gotten long? At 466. I would have missed this whole thing in the 420s. That's like, oh, obviously, if you look at the 3-year chart, no, bullshit. Nobody did. 3 people did that. Now, 466 is a plan. Now, what is my plan? I'm going to take it right here. I'm going to get in at 466. My stop is going to be 423. That congestion zone, that's where I'm going to get out. I'm starting my plan. I'll have 2 limits. First one is right around here, which is kind of this 475 area, which is just above this support line, like it crosses above support, number 1. Number 2 would be up to here, the second one. So I now have a very specific plan, and I'm going to show you how it looks. It's very simple, and we're going to walk forward how to do it on 2 different stocks. April 9th, it took me a while to get there. I did not buy that dip at 422, 423. I got long. I've written this for myself. I got long at 466. First half is out at 475. People use 2 limits. A lot of times when the first limit is hit, people change their stop to the next highest congestion. I'll show you how that looks because we're going to do that. So it's a layered exit, right? That is the plan. Let's move forward. Let's go 1 week forward. Okay. We'll go to the 16th. Where are we? Okay, has anything changed? Nope, stock's at 444. Nothing's changed. I'll go back to our plan. The action so far is nothing. I've done nothing because I did not hit 475 or 423. This is it. Remember, this is a look back window. I'm not using the future anymore. I made a decision based on data in the present time with an algorithm based on the present time being April 9th, April 16th. Let's move forward 1 week. By the way, you can go day by day if you want. It's just, I promised you a relatively fast webinar. 23rd. Okay. Stock got pretty low to the stop, never hit it. It is now back up to 454. Has anything happened? Remember the plan? This was the plan. The plan was selling here or selling here. Neither of those things happened. This is how my plan looks. Didn't do anything. Nothing. Great. Let's go a week forward. Okay. The stock hit 475. What was our plan? If it hits 475, that is my first exit. So what did I do? First exit was hit. I'm out. My next limit is 494. I could have changed the stop back to 450. So some people, when they hit their first limit, tighten their stop. Okay. That's up to you. Personal taste. Okay. All right. So we've had a successful half trade. Let's go a week forward. All right. Stock's at 481. Nothing has really happened. Close but no cigar. So a week forward. I've done nothing. Oh, I chose the 7th. Sorry, I'll go to the 7th. So we're matching my spreadsheet. So again, here we go. We got long at 466-ish, here-ish. We sold a little bit at 475, and now we're just waiting. I've got a limit at 494 and a stop at 423. And finally, let's go to the last date. We'll go forward a week, or to the 12th. And there it was. There was NASDAQ going cuckoo. 507. I would have been out before then. What was the plan? And when did it happen? On the 12th, the stock ripped. It got to 511, but it hit 494 on the way to 511. I would not have sold at 511. I would have had a limit, and that's it. So this is what the trade was. Got long at 466, sold at 475 and 494. That is what a plan looks like, and that is how you follow the plan. Now, I want to go back to the present day before we go forward, right? To today. And remember this chart when we looked there, like, oh man, I'd have gotten in at like 415, 420. I would have bought this and I wouldn't have sold until it hit like up here to like five. I would have made 100 handles. No, you wouldn't have. I'm sorry. And no, I wouldn't have either. It would have looked like I just did. But when you look at a chart of the future, which this is, when you're looking at the past, it ruins your mind. You think something's wrong with your trading. You think trading is easier than it is. It isn't. You think you made a mistake, or even worse, if you did this trade, you think you figured something out. You didn't. You got ass lucky. You can't use a chart of today to look at what you would have done in the past. And I'm tired of making that mistake. And that's why I've created the look back window. I'm going to show you another example. Another example where it looks like, oh my God, I would have made 100%. Or it's like, would you though, really? So here we go. I'm going to go to Cloudflare. Here's a 3-year chart of Cloudflare. This is where it kind of bottomed out. It bottomed out like 90 and it got to like 180. It's like, oh, dude, I would have doubled, right? Because like that's pretty close to congestion. I would have got long there. You can see right here, there's kind of this topping formation. Oh, of course I would have sold that. Dude, of course I would have doubled my money. No fucking way would I have doubled my money. No way. 0% chance. Let's go back to Liberation Day. Now we are not using the future to guide us. There is an argument that you could have gotten long here. Okay. I am not going to make that argument, but the stock price did come up. Oh, actually, maybe I am making that argument for a second. The stock did come up through support from the bottom to the top and closed above. That's actually a reasonable entry. I actually wouldn't have because I'm not convinced yet, much like with the Qs. And also, remember, this is using this data and also this double toppy stuff. Like I'm not cool with that. I want to see more kind of evidence. I'm going to go forward a week. So I have no position right now. Okay. I'm going to go forward a week. Okay. This is the 9th. I'm on week forward. This is when I would have gotten long. I got the second time it crossed. Remember, this is where we were a second ago. I said, no, thanks. It came back. Okay. Now I'm kind of convinced it's going to hold that. Okay. This is when I would have gotten long. I would not have gotten long at 87 to double my money in 4 days. It just wouldn't have happened. So this is what I would have done. I'm going to get long here. And you're like, okay, well, where's your stop? My stop is at 95, which is this congestion point, right? There's no line here, but it definitely dawdled around here. I don't want to mess with it if it's going. I'm out of this trade at 95. And where are my exits? Let me turn on my highs and lows now. I only see one obvious exit. You could have traded for all-time highs. I'm telling you the truth. I wouldn't have. I would have put my stop at this 132. It would have been a single stop, a single limit. I would have stopped at, let's say, 95, and I would have put a limit at 132. I'm just telling you the truth. I would not have had a secondary limit. If you really follow the rules of 2 limits, you could have done that too, and you would have done better on this trade than I did. Okay. Let's go forward a week. So now we have, let me just write it down. We're long with a stop at 95, in at 112, a limit at 132, right? $20 upside, $17 downside. I want my upside to be larger than my downside. Kind of checks all the boxes. Fine, let's go forward a week. 416. Okay, the rule is I'm getting out at 95 or 132. Nothing has happened. Right? I'm following my plan. It's a whole bunch of nothing. 416 chem. I didn't do it. Okay, great. Let's move forward a week. All right. Need to catch this up with you guys. Forward a week. All right, what am I doing now? Well, remember, I said I'm selling at 95 or 132. It hit neither of those prices, right? So I did nothing. Nothing to do. It's encouraging, right? It's encouraging that it's popping back up, but there's no trade here. Okay, let's go forward a week. Okay, it has done nothing, but here's one thing. Now for me, now that it has crossed from below, it has crossed above support, I actually would have raised my stop. It actually won't matter in this trade, but just so you know how I think, I would have taken my stop from here to here. So just so you see it, I didn't do anything, no trading, but I did raise my stop to 105. It actually wouldn't have mattered in this trade. So this isn't a trick I'm trying to pull on you. I just want you to know how I raise my stops sometimes, right? We get through a congestion point. Sometimes I'm like, yeah, I'm going to raise that stop. Part of the reason was too is that I'm not like in love with this stop. There's no actual congestion line here. There was just some like blips, and I'd like a more clearly defined one. Having said that, there's no trade. I just took my limit, my stop from 95 to 108. Right? Okay. All right, let's go 1 week forward. 6th of May. Again, I'm only looking at data I had. Oh, stock hit 122. Did I do anything? No. I'm selling at 108, selling at 132. I have done nothing so far. And I know that it looks at that when we look back at the charts, like, oh, I'd have got long at 89. I would have sold at 180. No, I did neither of those things. Right now, I'm long at 112 with a stop at 108 and a limit at 132. Right? Okay. Let's step forward to May 12th. Not using the future to predict the past. That's it. It hit 142. I would have been out at 132. So I would have been out. Actually, I can go one day before. It looks like 511 would have been the day I would have. Oh, 59 would have been the day I would have been out. Yep, that's the day I would have been out. 59. Let me correct that in the spreadsheet. I would not have had that extra game. Oops. It's all right. So remember my rule: get out at 132 or 108. I would have been out. So this was my trade. This is the whole trading plan. I told you it didn't have to be hard. This is when I initiated. I raised the stop. I exited. Now it's 112 to 132. Cool. I think that 20% in a month is unbelievable. Is it as good as when I first showed you this chart and what you'll see on every other chart, which is like, oh my God, I would have doubled my money in Cloudflare? Yeah, no, because you wouldn't have. You wouldn't have. Now, I will, in fairness, some people would have had a second limit at this peak. This peak did exist well before. We're not using the future. You would have made more money. Honestly, obviously, if you would have sold half here and then sold the other half here, fine. I wouldn't have. I would have been out at the 20%. But that's how to use this look back window. Okay, so it's a fantasy. I'm going to show you a fantasy versus reality. This is reality. Here's the fantasy. And I show you the fantasy because I don't want you to hurt yourself. This is fantasy. Getting it at 89 and selling at 181, if you're wondering where those prices are, getting it at 89 and selling at 181. When you use a chart today about what you would have done 2 months ago, you're using the future to predict your stock returns, your stock trades. You're just punishing yourself mentally because you wouldn't have done it. And then you're going to think, I need to get better at trading because I'm not seeing these signals. No, you do need to get better at trading, but that's not a signal. That's using the future to predict the past. Guys, this is a fantasy. Okay, and I hope some of you got the fantasy. I really do. I'm saying for the vast majority of us, that's a fantasy. This is reality. This is reality, right? These are big fucking trades, 15, 20% in less than a month on big ass dips without risking everything because you're buying something that's catapulting down. That's how you use a look back window. Okay. You can do any stock at any time. You can decide how you would have traded COVID, but don't use a chart that has COVID in it and it's 2020, a chart that goes to 2025 or even 2023. Go back to the day and decide. I'm going to take off my highs and lows because it drives me crazy. Okay. For those of you who are paying attention, yes, this pulsing circle did come into play on the day I exited 5/9. Actually, it would have been the second day. It would have been on 5/12. It would have been up here. So hypothetically, I could have closed the trade on 5/9, done what I did, saw the pulsing circle and been like, okay, now I want to start a new trade where this is my stop and my limit would have been up here. I didn't, and that's ambitious and that's aggressive trading, and aggressive trading is appropriate at times. So I won't say no one would have done that. I do know traders that would have done that. At times I would have done it. I did not, and so that's it. But That pulsing circle would have given me like, wait. Okay, it's Monday now, and there's another gap up. I might have to get back in this trade in a different way with a different stop and a different limit. This is how to actually look at stock charts. And I will tell you, I have been criminally wrong too. I have been criminally using charts like this to try to tell myself how I should have traded. As you guys know, I'm a former option market maker, and a former hedge fund manager. So I didn't really do charting. I traded vol and I traded long short fundamentals, right? Right. That's what I'm famous for, published for, not famous. That's what I'm published for. That's what, blah, blah, blah. So that's why Morgan Stanley bought our firm. It wasn't this. So it's taken me a while to see like, why is charting not helping me? And I just went back down to first principles. I'm a mathematician, a Stanford trained mathematician, and with an area focus in measure theory, that's probability, and machine learning. Right? That's where Ophir's name comes up in the publications of finance if you look in academic papers, right? For AI. Okay, that's just testing. That's a fancy way of saying testing. And when you test, you do not use the future to predict the past. That is what stock charts up until basically this day for me have been, and why I've struggled so much. Where I've actually done better if I said, I'm not going to look at the chart, I'm just going to use TradeMachine, which I'm going to talk about in a second. I'm just going to do that. And I figured out why. And the second I figured out why, I told Jason, we put this out, and now this is going to be in Pattern Finder. If you don't see it in Pattern Finder, there's a reason I'm not done with the presentation. Okay? Do not use the past to determine the future. Don't do it. What would you have done? Don't look at this and be like, oh man, I could have got Cloudflare at like 65. Look what I would have done. No, then go back here. What day was this? August 5th, 2024. Let's go back to August 5th, 2024, and you tell me how you actually would have felt. Because that's what you would have known. And this is what the algorithms would have looked like. Ready? Here's August 5th, 2024. Are you buying that? I'm not. That looks like something that's about to go down. It did. Now, having said that, it did bounce off support. So you could argue there's a bullish trade forming here, right? But it's not so obvious to me that it's long when I go back to today and I look back at that date and I'm like, I would have crushed it. I would have crushed it. I would have got long here. Would you? Don't lie to yourself. Test yourself. And part of the reason I have this thing, I'm going to go back to that date, which was August. Part of the reason I had Jason build this day by day thing is you can just start clicking day by day. Do I have a plan right now? Would I be long? Let's say yes, I would have been long because it came through congestion. I would have stopped out at 74. First limit is 86. Second limit would have been 110. And you can just walk it every day forward. Would I still be long? Yep, still be long. Would I still be long? Yep, still be long. Would I be long? Yep, still be long. Would I be long? Right? You can walk it through, train yourself. What would I have done on this day when the chart looks like this? That's how you do it. I was stuck on a weekend, so it wasn't going forward. So this is how to use charts. We can no longer do the thing that everybody who uses charts seems to do, which I totally fell for. You cannot use the thing where you look at a chart today and decide how you would have used a base to form a thing. And the only reason we know there are higher lows is because we have the future. We didn't know there were higher lows. Back here, there were lower lows. Okay. Now I'm going to go to TradeMachine. For those of you who don't know what TradeMachine is, it is a back tester for options trading. Basically, it allows you to do what I just showed you, but with options trades. I'm going to show TradeMachine members exactly how to use TradeMachine with Pattern Finder. Exactly. Okay. I'm going to use one of our built-in strategies, which is called a buy the dip with AI. We coded some of my AI in here. Okay. For those who don't know what options are, it's just a trade that tries to kind of buy a dip, a very specific kind of dip. Okay. I'm going to look at the last 3 years. And so I don't make this run too long. I'm just going to look at the Mag 7. This is all built into TradeMachine. You can look at any stocks you want, but Mag 7. Okay. But this isn't really fair. I want to pretend we're in 2024. If I'm in 2024, I don't know how this did in 2025. So let's go back in our time machine. Let's say it's June 14th, 2024. Let's look at the Mag 7. Which of these look like trades I might do in 2025? Only Amazon and Tesla. 1-1 in Microsoft? No. Meta and Nvidia didn't trigger. Apple didn't trigger. The only stocks that interest me here, remember, I'm pretending it's June 14th, 2024, for this specific strategy are these two stocks, Tesla and Amazon. So I'm going to do that. I want to put them in here just so we stay focused. Okay, so in 2024, I'm claiming for the next year, I wouldn't have had these profits. For the next year, I would have either benefited or been hurt by the next year. Let's look what happened in the year of 2024 to 2025. Hey, what do you know? 1 win in Tesla, nice. 2 wins, 1 loss on Amazon. Now, how do I use this with Pattern Finder? Let's start simple. When did this trade happen in Tesla? The signal was July 1st. July 1st, 2024. I'm very simply going to go back to July 1st, 2024 in Tesla, and I'm going to decide if I think I would have bought. Do I think what I'm about to see is a bullish chart? I'm going to zoom in, move it over. Now we're July 1st. This is what we would have been staring at. You would have been in TradeMachine. You would have got a trigger to buy this trade. This to me is an obvious do. Obvious. We have 3, 5, 10 years of back testing history, which look good. This is an obviously bullish form. Does it mean it's going to work? No, I mean, I can't guarantee anything, right? I have a back test behind it. I look at the chart. I'm doing this trade. So what would Pattern Finder have done for me for this Tesla trade? Nothing. It would have reaffirmed it. It would have said, yep, do that. Okay, let's get a little bit more interesting. Amazon had 3 trades in the year of 2024, June 2024 to right now. Okay, let's take a look. This first trade was a winner, and it started on August 13th. Okay, let's do that. Would I have gotten long Amazon, gotten a bullish bet on Amazon, August 13th, 2024? We have to be realistic. Would this have hurt us? Okay, does this look bullish? Ready? Absolutely. I think no one would argue this is a very bullish formation, right? It's a bounce. It's through congestion. We got upside. TradeMachine is telling me historically this is a good trade anyway. Does the chart reaffirm it? Yes. So far, what has Pattern Finder done for me for Tesla and Amazon? It said yes and yes on 2 winning trades. Okay. What is the second trade in Amazon? It was September 9th. Okay. Would I have gotten long Amazon on a date I already forgot? September 9th. Sorry. Okay, let's take a look. Don't worry. There's a point to this. It's not all going to be this. Absolutely, unambiguously. It's in between 2 channels. It came from up. The current stock is 175. Downside is to 168. Upside is to like 193. And most importantly, I'm using TradeMachine. I am using the AI, which is saying, yeah, this is a good time. So far, Pattern Finder has said yes to a Tesla trade, yes to 2 Amazon trades. It hasn't really changed our lives. If you were a TradeMachine member and didn't have Pattern Finder last year, so far, I've done nothing for you. Let me show you when I do something for you. Let's look at the third trade for Amazon, which happens to be the loser. May 12th, 2025. I want you to be honest when you see this chart. Would you have gotten long Amazon if you saw this on May 12th? My answer is hell fucking no. There's no way I'm getting long after a rip, after a pop on that day, where there is no congestion above that. Like, yes, the stock kind of went up here, whatever. I have no target. Right? I could turn on the highs and lows and press it for like this 233 range. This is a no for me. I wish the trade would have triggered here, but it didn't. It triggered here. This is a no for me. I would have gotten the alert from TradeMachine. I would have done my Tesla trade. I would have done my Amazon trade. I would have done my Amazon trade. I would have gotten this Amazon trade and said, pass. Not only would I not have bought anything here, I wouldn't have sold the put spread either. No thanks. Pass. So, what does this look like if I don't take that one trade? This is what it looks like. This is when we just looked at buy the dip. We validated from 2022, 23, and 24 that we would do the trade. We're not using the future. Then we said, how did we do in 2025? We went from 2 wins and no losses and 70% return Sorry, 2 wins and 1 loss, 70% return. We took out that one loser, and now we're at 2-0 and 115% return. So how to use Pattern Finder with TradeMachine? I just showed you. If it's a bearish trade, make sure it's a bearish chart. If it's a bullish trade, make sure it's a bullish chart. If it's a not bearish trade, so selling a put spread, make sure it's not a bearish chart. It doesn't have to look bullish, just not bearish. Like that's like fade the dip, spread the sell-off, stuff like that. If you're doing pre-earnings trades, same thing. So I want to show you something here. If you just want to do that pre-earnings 14-day thing, watch this. Let's look at our 14-day long calls. Okay. I'm just going to choose NVIDIA because why not? And I'm just going to look at the last year. It wasn't a good trade before, so we wouldn't have looked at it. But let's just pretend we got stuck. We're like, okay, we got this trigger. Right? Let's say we got this trigger, which we would hope Pattern Finder would help us get out of. It's just for those who are wondering what's going on. This is what the trade is. It's super simple. Sorry, it's this. It's 14 days before earnings, getting long a call, selling right before earnings. It's just playing this momentum. Only do it in stocks that have that pattern. But this is what the trade. This is the trade I'm examining. Okay. All right, November 6th, 2024. Let's not be disingenuous. Would we have gotten long November 6th, 2024 in NVIDIA? Let's see. Would you have gotten long on November 6th, 2024? You tell me. Remember, I don't have the future. I don't know that NVIDIA went to blah, 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 blah. Whether you think I'm pitching a product or not, I think you very clearly see this. Most of us would be like, hey, I'm not going to initiate a long call on this day. It is at resistance, it's at congestion, it's at an all-time high. Could it run through that? Of course it could. But that's not a bullish trade for me. One of these trades, you would have gotten out of. The other one you would have lost. I'll show it to you. This other one, May 14th, 2025, I would have gotten long. May 14th, 2025. It didn't help us on this one. I'm not going to show you something that always works. This is how it looked. So I know this is like going straight up, and a lot of people are like, I don't want to do that. To me, this is a very bullish sign, and I would have gotten long. I would have done that 14 days pre-earnings call, and I would have lost. And if you want to see what happened, I'll just go a week later, just so we have like just some sort of set. It's actually a trade that ends 2 weeks later, so I'll go to the 28th. So it's not that anything bad happened. The stock just stayed here, which of course means you're losing on your call, right? So that's how to use Pattern Finder with TradeMachine. TradeMachine is the brain and has my AI and our AI in it. Use that. But if the chart looks terrible, use that. And if you're trying to analyze the past, use the date in the past that you would have traded. Don't use the future. And if you're wondering, Mano, Fear, you told us to use the future. I did. This is my confession to you. I'm fully confessing to you. Right? I'm repentant. I was telling you guys Pattern Finder is awesome because you look at this and you're like, oh man, I would have bought here. No, you wouldn't have. I'm a professional trader. I trade a lot. I'm good at it. I'm not good at charts. I'm way better now, but I make a lot of money trading options. And I was just like, how is this not working for me? I know how to trade. Then I started doing this in Pattern Finder. I started going back and looking. I was like, oh, because everything else I do in my trading world, I don't use the future to predict the past. And then I realized this is how you have to use TradeMachine. This is how you have to use Pattern Finder. That is my full presentation. I'm going to go here for the last few slides. Yep. This is the before and after, just to show TradeMachine members like this, just to do it. Now look, I'm going to take Q&A. Having said that, this is a webinar and I'm trying to sell product, so this is how it is. If you want Pattern Finder, don't get it before you hear all the words out of my mouth because you're going to buy the wrong version. Just hold on 1 second. Just hold on. Okay. You go to patternfinder.cmailviz.com webinar. Okay. I'll go there. $48 a month, but the monthly Pattern Finder does not have the look back window. It only has everything you saw without the look back window. And if I'm being honest and communicating with you, I don't think that's worth it. I don't. This look back window thing is only available for annual subscribers. How much is it annually? Normally, it's going to be a lot more. If you're not a TradeMachine user, so you're just new to CML, you can get it right now for $329 for the year. It's a year of Pattern Finder. If you are a TradeMachine subscriber, you can get it for $298. If you're a TradeMachine Platinum subscriber, we're still going to give it to you for $198 because I love you so very much. And you guys know that that's ridiculous. I'm selling it to you for like $15 a month, but I love you. If you are a TradeMachine Pro sub, you or Platinum sub, you need to email support. Don't go to that page. That's not for you. Email support. Mandy will tell you. She'll give you a special coupon code. She'll verify you're a Platinum member, and she'll give you a code. Okay. If you want Pattern Finder and you want to make the commitment, it's $329 a year now. It's going to go up after this webinar significantly. If you're just curious if you like Pattern Finder at all, and you're like, I know I would use the look back window eventually, but I just want to see if I like it. I don't want to commit. You can do the $48 a month and fart around on it. And then you can convert that to an annual. You can email us and say, hey, I want to convert my monthly to an annual. Can you prorate it? Yes, we can. So that's it. So it's patternfinder.cmlviz.com webinar. That's it for my formal presentation.